Stephan, 2.6 billion rand over 10 years, that's an average of 260 million rand a year. How does that compare globally?
I think, being a developing country, it's still a small figure, globally speaking, but for a developing economy, it's quite impressive. The majority of those funds were invested in the 3 or 4 last years, so on average 260, but I think if you look in the last 3 or 4 years, it's probably about R500 million per year. So it's quite impressive. It's an emergent industry, it's quite small, but it is impressive to be able to say that we've got an established venture capital industry.
And are we starting to see momentum building in this industry?
I believe so, yeah. I think if you look at the introduction of a lot of new private funds here around 2004, and then a lot of the public funds supported by the Department of Trade and Industry, the IDC, Department of Science and Technology, around 2004, 2005, it really started picking up momentum. And the peak that we found in the statistics was around 2008, with a slight drop-off thereafter in 2009.
And that was during the financial sector crisis, really?
It was, but it wasn't really as a result of the recession. It was more a question of most of the new funds raised their capital around 2007 and then immediately invested most of it. So around 2009, they started looking at nurturing and consolidating the investments that they've made. So I think around a normal VC 10-year cycle, that's what we're seeing in South Africa. So for that cycle, we're coming to the end of the cycle, and we're probably going to start looking at a new cycle around 2013 onwards.
When you talk about the 10-year cycle, is that the period until the exit of the funding partners?
Yeah, it's an academic term. It's not absolute. But most of the VCs would look at a 3 to 7 year return period, so 3 to 7 years after they've made the initial investment.
Similar to private equity.
Similar to private equity, but some of the funds, especially the family-owned funds, funds with personal money, don't have that specific limit, so they can hold on to an investment for any time they wish to do so.
Typically, what sorts of funding is provided for venture capital? I mean, what's the cut-off limit before it becomes private equity or something a bit bigger?
It's normally, I think we looked at, I think the largest transaction was in the region of about 45 million rand. The median was around 10 million rand, so I would say private equity, we're talking about 80, 90 for a small transaction, million rand and upwards. So it's more a question of the stage of the business. We're looking at, for venture capital, around startup stage, so a new business. And then growth and development capital. And the development capital would start looking at more private equity kind of things. But inherently, we're talking about something where the risk factor is still such that even private equity wouldn't look at it.
And over half these deals went into startup businesses, didn't they? What sort of businesses were they typically?
The majority of the transactions over the 10-year period was in biotechnology startups. And the reason for that is it's about a quarter of all transactions. The reason for that is that the South African government launched a national biotechnology strategy around 2002, where they put a lot of money on the table for biotechnology. So that was the preference. But second to that was ICT and electronics. And you'll find that that is similar to the trends that you see in most developed VC markets, where between 30 and 40% of all transactions go into ICT, online, electronics, transaction platforms for financial services, those kind of things.
Because you mentioned the IDC and the Department of Science and Technology. I presume they're the main kind of government-backed funders. How about private sector funders? Who are these investors?
Most of the investors are investors that raise money from wealthy individuals. So you would find that some of the, especially in the recent times, raising money from guys like Johan Rupert, some foreign investors. There's 1 or 2 investors that are able to draw money from angel investors in Europe and then formalize that as VC in South Africa.
Angel investor as a single individual, that's right.
And yeah, that's correct. And then there's 1 or 2 funds that look more like institutional investors, but the majority of them are independents or funds that are able to, fund managers that are able to draw funds from a number of funds.
Do these investors play a hands-on role in the business like a private equity group would? I mean, do they see this project through to fruition?
Depending on the investor, and we looked at a total of 33 different funds. Some of them prefer to be extremely hands-on. They would spend a lot of time in the business, take directorship position and so forth. Some of them would prefer to be a little bit hands-off, especially if you look at the public funding instruments, especially from the Department of Science and Technology. The experience is not necessarily more on the transactional side, but more on the innovation side, the technology and so forth. But even there, they appoint people to oversee those transactions quite intimately. So for venture capital, you need to have that, otherwise the deals will go south very, very quickly and you wouldn't know about it.
How about the risks of some of these transactions? Because I'm sure some of these startups don't make it through to the end. I mean, what's the rate of failure? Any idea?
I mean, the typical anecdote, and when you say typical, then you automatically think, surely that's not true anymore. But we keep hearing it from the VCs, is that if you do 10 transactions, out of the 10, probably 5 of the 10 would be outright failures, 3 of the 10 would be more or less break even, and then 2 of them would have to make up for everything else. And we see that kind of failure rate. I think oftentimes, especially in South Africa, we think of venture capital as, these guys are going to give us money, but we forget that there's an enormous amount of risk. And that's true. You see a lot of the transactions, especially if you look at the earlier phase of the survey around 2000 to 2005, many of those transactions were total outright failures, or because of market conditions, the investors just withdrew. So venture capital is risky. That's the nature of the game.
It was one of the big successes we were chatting about in the studio, of course, was Mark Shuttleworth a number of years ago. How about the constraints to venture capital? Because I'm sure pension funds probably won't be able to invest much because of Regulation 28 of the Pension Funds Act. You also do point out in the release today exchange control restrictions, but we have had a bit of loosening in the latest mini budget.
It's a loosening on the capital outflow side, but in terms of capital being intellectual property as well, it's still the same behavior, and that's a huge constraint for the industry, for the simple reason that venture capital by nature needs to scale. And that scalability, in order to get that growth rate, most of the time will not be able in South Africa. Our market is simply too small. So if you have a startup venture here based on South African intellectual property, and you really want it to grow, you need to go to Europe, you need to go to Asia, you need to go to the United States. And that's where exchange control is hampering the outflow of that intellectual property. The one side of it is that as an investor, I can move it offshore, but then I have to exit from the transaction in full before I can transfer it. And in instances like that, the whole purpose of scaling is to get those returns when you go and launch in United States, or you have a listing, or whatever the case may be. And we are excluded from that because of exchange control to some extent. I think the other part of it is that it makes it longer to invest, because you have to go and apply for exchange control approval, and it makes it expensive. A lot of the international VCs that look at investing in South Africa don't have those constraints, and as a result we are anti-competitive when it comes to dealing with them. So that's definitely the biggest constraint.